Hey, Crypto Hotep here with another investing video and week number 2 update of the family portfolio. If you're unfamiliar with the family portfolio, it is a portfolio specifically related to my family that I have placed into M1 Finance. That's the broker. The family portfolio has segments of specific stocks related to my family members right here and what they like to own. If you want to know the methodology behind that, feel free and watch the first video where I explain the reasons behind why I'm doing this and the steps that I've taken and the whole complete breakdown of that portfolio. With that being said, before we jump right in, as with anything, this isn't financial advice at all. These are only my opinions, and this is involving my investing journey. Please consult with a professional before you decide to invest or trade into any stocks, crypto, precious metals, any volatile asset of the sort. With that being said, we're going to jump into the video. What we want to do first is we want to talk about the family portfolio and give a brief update on the different things that have happened within the week. And then what I will do is I picked one stock out of the family portfolio to focus on and do a quick breakdown of that stock, which is Johnson and Johnson, and then also look at a chart for Johnson and Johnson as well. So with that being said, we'll jump in here. The balance of the family portfolio as of 3/15 is 478.68. Again, small account, but we're building it up. We did have several buys this week, or today, I should say, which is good. So we can show you that. And then we also had some dividend action, which is nice. So here we can look here for dividends. We have Microsoft, Chevron, and Exxon Mobil here, which is really nice. The Chevron, Exxon Mobil, and Microsoft, these were all in dad stocks. So my pie, if you will, portfolio here. So very nice to see. I obviously am not looking so close to the numbers, but just the fact of consistently gathering and being the recipient of those dividends. As I mentioned today, we did have several buys, and we did have a contribution to that portfolio, which made it so we could buy some stocks here. And what M1 Finance actually did to help the disparity of the portfolio, because you see that my portfolio kind of overshadows everybody else's in terms of size and balance. They focus primarily on the on my family members, uh, my kids and my wife's section of that pie, and help build their balance up, which is fine. And basically, all I did today was just kind of DCA into this family portfolio, and then M1 Finance through the algorithm decided, hey, we're going to build up their portion of it with this buy. And they bought more Celsius. They bought a position in the PepsiCo with my wife. Google, again, this was my wife's. So these three are my wife's. Tesla, which is our youngest. So I bought some Tesla, which ironically is at a pretty good price right now. Now it could go lower. I wouldn't mind DCAing into that though. Amazon, which was our middle. Costco, very good choice. It is on the way down right now, which is completely fine. Don't mind DCAing into that, which is our middle as well. McDonald's and Apple, which are our oldest, and then Nintendo. So, so a lot of good buys today. I'm not mad at it at all. Um, and we can take a look here, and I'll kind of break this down for you guys. So weighted rate of return as of right now, we're up 4% year to date, which is okay. We have our dividends, the amount of dividends that we've accrued year to date, and then the percentages. So honestly, the only reason I would say that our portfolio is up is because of my wife's stocks. And as I did note, her stocks are weighted with Celsius carrying the bulk of the load at a staggering 41.44%. Amazing. Her portfolio itself is up 19%. Let me change this year to date. Yep. So 19% year to date here, which is fantastic. Celsius just on a dramatic rise right now, and it just seems like it can't be stopped. There will be a top somewhere, but as of right now, it's floating in price discovery. The price of the stock is, so who knows where it'll go right now. But um, her Celsius position is up 41%, which is tremendous. Google got in on Google at a pretty good price, up 1%. And as of right now, she's kind of just at a standstill for Pepsi right now, which is kind of odd. But and let's just go to our oldest. Our oldest, other than myself, our oldest child actually received dividends. If we remember last week's video, she received 2 cents for dividends here. All, year to date, we are down 4%. And basically, that is McDonald's and Apple. Apple is on a downtrend, as we know. So that's to be expected. Our middle stocks, weighted return, a little bit less than 1%. And our middle child has Amazon, Nintendo, and Costco. Again, Costco on a downswing right now from their last earnings call, understandable. Her biggest position, though, currently is Amazon, and it's weighted as the biggest position, currently up 2% on that position, so not bad there. And sorry if I keep switching to year to date. And then our youngest here. So youngest, as I mentioned in the buys, youngest has a position now in Tesla, currently down, which is completely fine. I think Tesla will turn around. We have a position in Nintendo, which is the bulk of the position, and then a position in Apple here. I asked our youngest how he wanted his portfolio set up. Did he want Nintendo to have the bulk, Apple, or Tesla? Our youngest, as well as our middle, loves Nintendo Switch all day, every day, and said he wanted to have Nintendo to be the bulk of the portfolio. So I'm just gonna let this ride. I'll let him make that decision. It's not a huge disparity. It's about 10%. So I'll just keep watching that. And then my stock. So currently we are let's see, year to date, we're looking at down a little bit, primarily the tech space here. We have, all in all, I got into Apple, Microsoft, Amazon, and Google at a pretty good price. That's why I'm up on those. But Nvidia, again, it's taking a turn down. Completely fine with me. Meta, another one taking a turn down. Coinbase, crypto's been kind of lagging behind the past couple of days out of the week, so Coinbase naturally will be going down. Totally fine. As well as AMD. AMD and Nvidia kind of play off of each other. And one add to my technology portfolio is Broadcom, ticker AVGO. I figured, Wi-Fi connectivity, this was kind of a missing component of my technology slice here, of my stock pie. So I think that was a good add-on there for me. Let's see. And also, I believe, let's check industrials as well. Yeah, industrials. I had two more additions with industrials. Industrials have been good, actually. Industrials have been up about 1% for year to date here, all in the green, um, and two additional add-ons that I that I added to this slice of the pie is Exxon. I had Exxon in my previous setup, and I guess it just didn't carry over, so I just added Exxon. And then I also wanted a railroad. So CSX or UNP were my top two. I didn't want both. Figured one would be enough. UNP seems to have a little bit more upside for me, so I added UNP as well, and these are both dividend related stocks also. Um, and pharmaceuticals is up. Um, I believe Pfizer got a little bit of good news from what I saw in terms of some of the medications that they may be delving into. And again, this is a split 50-50 between Pfizer and Johnson & Johnson. And real estate, we are down. And then restaurants and food, little slight uptick, a um, little bit less than a 1% up, but Coca-Cola chugging along as always, Texas Roadhouse chugging along, Hershey as well. I'm not mad at this portfolio in terms of the restaurant and food section. McDonald's is down over 4%, so just looking at that, but other than that, I'm pretty happy with it. And then to switch kind of focus here, and close this section of the video with the family. So, all in all, year to date, up 4% for the family portfolio. We're starting to add more contributions to my family side. So, we do have a little bit of ways to go to close the gap on mine, understandable, but we're getting there. As I mentioned, the contributions are just with quote unquote extra money that we have lying around that we don't mind throwing in here. So, and again, this is a small account. We're looking to build this up, and we're looking kind of more long term than just um, short term here and now. And one switch in focus here on the video, one thing that I did want to cover is a stock within our portfolio, and that's Johnson and Johnson. I like the stock a lot. It is a dividend aristocrat, meaning that it raises its dividend for the past, I believe, over 25 years. And so this stock holds near and dear to my heart here. And I want to kind of break down my thought process and how I review the financials of the company when I'm looking to add maybe a position, and also when I'm reviewing annual financial statements for this company. I am new to reviewing the income statement and the financial statements, so kind of bear with me if I'm missing something, or if I'm not maybe explaining something correctly or completely. Just know it's a work in progress here. So with Johnson and Johnson, I'm looking at Johnson and Johnson off stockanalysis.com. One thing that I've found with other dividend investors or stock investors are the tools that they use. I've never heard anybody really pump stockanalysis.com. I thoroughly enjoy this site. It looks great on the mobile app, or not mobile app because they don't have one, which is a downside. But it looks good on the mobile browser, and also looks good on regular laptop here. They present information very clearly as well, and it's not all jumbled together, which I like. So it gives the breakdown very quickly on Johnson and Johnson. You have your tabs here for overview financials, which we'll go through, the forecast, the dividends, which is my personal favorite, and then the charting as well. And then on top of that, it gives you a brief synopsis on what Johnson & Johnson actually do. Industry, sector, number of employees, obviously the regular stuff, quick snapshot of the financial performance, and then the analyst forecast. If it's a buy, strong buy, hold, and then obviously the recent news articles, which I love. Okay. Switching over into the financials is another reason why I like stockanalysis.com. Everything's clean. It's very clean. I can see things at a quick glance. I don't have to squint. It's very good. So when I'm looking at a stock potentially to evaluate, maybe not to add to the portfolio necessarily, but to maybe just, again, annual evaluation of that company to see where they're trending. I usually take a look at the financial statement, and one of the things I do look at, obviously, is revenue start and finish. So just seeing the revenue side, how many years it's increased, how where are we at, and with Johnson and Johnson, I do like to see my little bar chart here. It's steady. That's what I'll say. It's the highest it's been in 2023, which is a good sign, but it is steady. So, with that being said, we can look at year over year revenue growth. Here, we can see that this is the highest percentage it's been, um, in this time frame from 2015 to 2023. One other thing I look at here is I do look at net income, basically the income after taxes, after everything's been paid. What do you have? Are you negative or positive? And tremendous growth here in their net income, over 90% of net income. That's amazing. So I I'm thoroughly impressed from J&J's net come with that. So that kind of checks that box here for me. I do look at free cash flow, and I kind of see where we're at there. We've trended down. I will say that. So we've trended down from what year is this? That's 2020. Expected, right? 2020 was a big year for J&J. So trending down from 2020 for free cash flow, but staying again in that range. Completely fine with that. Dividend per share. Again, I look at this, and what's nice is stock analysis actually bolds this out for me. I didn't tell them to bold these little sections out, but this is something that I look at. Okay, how long have you grown this dividend? And as you can see, the dividend payments year over year over year over year has increased every year. And this is an amazing piece. And this is one of the reasons why I have Johnson and Johnson as a 50% allocation percentage in the portfolio, is because they've increased their dividend every single year. When you combine that with compounding, the sky is the limit in terms of income. So I don't really look at EBITDA that much, honestly. I kind of have my Charlie Munger thoughts on EBITDA. I kind of stick to my net income. And then I will go to the balance sheet. With balance sheet, I just like to look at quick things like cash. What's the cash look like? The cash outlay. Again, it's a little up and down here. Nothing really too startling though for me for cash and cash equivalents. I do look at total debt as well, and see where total debt is and how is that trending? Is it coming down? I will say that, with total debt from the previous, from 2022 to 2023, there has been a drastic decline in debt. So that is good. Um, Again, unfortunately, for 2021 to 2022, there was an increase. So good thing is they have their hands around the debt piece within J&J, and it's between these 2 years, we have it coming down. So again, though, if you look at it across, say, 2016 and up, we're still around in this range here for total debt. So it's still there. And then the last thing I look at is retained earnings. Retained earnings are earnings that aren't paid out in a dividend. And it's basically the sitting money that a company has to invest back into the core business or pay off a debt. So that's one of the things that I did read about and learn about from Warren Buffett. That's one of the things that they look at, because it basically means that they have cash kind of sitting on the side here for an emergency, or to go, or to put back into the business. And you want to see that increasing. And this has also increased every year as well. So this is a good sign. This is what I like to see. And then again, just cash flow items, net income, huge for me. Um, and net cash flow. I like to see net cash flow positive. As you can see, huge rise here in net cash flow. I do like to see that as well for me. And in all honesty, those are kind of the top things that I actually look at and that I focus on. I try to keep it very simple. I don't want to get kind of inundated with a lot of information here, but I try to keep it simple, straightforward. And stockanalysis.com does it really well for me because it lays it out pretty easy for me. Um, we can go through these tabs here, different statistics, quick statistics on the stocks here. Again, that forecast, that analytical forecast on Johnson and Johnson, and where like the high, the average, low prices. Very, very good information, honestly. Very good information, and very nicely laid out. The dividend section, which shows their ex-dividend date here, their annual dividend, what their annual dividend is currently, their dividend yield, their payout ratio, which for JNJ is 34%. This is lower than what I would say me, if I'm looking at a stock. I don't want to see anything between like 50-60%, honestly, um, in terms of payout ratio, because then they're paying out majority of their profits back to the shareholders. And I really don't want to see that. I would rather see them have a payout ratio below that 50%, other than say a REIT or a real estate stock, if you will. But I would rather see that below 50% because that means they retain those earnings. And again, those earnings are going to the business to help improve it, improve the services, that type of thing. They can see the dividend growth as well as over 5%. My dividend growth, I like to have my dividend growth beat out inflation. Inflation is typically, we would say, 3 to 4%, I would say. So I want to see my dividend growth at least 4% and up. And that way I know that if I'm holding this stock for the long term, which is the goal, then I'm at least going to be beating inflation on the dividend growth year over year. And that's honestly about it with how I kind of break down the uh, the stock from an income perspective and dividend perspective. And then last thing I like to go over are the charts. I do look at charts. I'm a chart guy. I'm a chart first guy. So I think that's one thing that I can bring to that investing mindset, because I don't see a lot of investors in the charts, in the candlestick charts. They may be on the line charts, but not in the candlestick charts. So with that being said, we're looking at JNJ here. As we all know, or if you don't know, the blue bar here are monthly key levels that I've drawn here. So everything you see here is the monthly key levels. You have the 100 moving average, 100-day moving average, which is this orange line here. And what we see with JNJ is we've seen a double bottom right here at 155.93 area, and we've seen a push up. Now, if we look at 163, that seems to be a point of interest for price. We've seen price tap it here at 1, tap it here 2, tap it here 3. Not only that, we just saw price this week again tap it here for a 4th time. And unfortunately, we didn't break that. So we didn't wind up getting a leg up into a new level of price range here. And as you can see, we had a pullback here. So what I would like to see from J&J is I do want to see the 158 key level hold here, very similarly than where we were right here. So what I would like to see is I would like to see price either do one of these numbers, come down, tap into maybe daily support, and then come and finally break through 163. If we do break down the 158 level, my next assumption is we break 158. We may come back here, retest 158, come back down, and then bounce off of the 100 MA for a move back into, or for a move back past 158. And you can see the 100 MA here. So my assumption is if we don't get this move, this clean move here, price comes down, we bounce off this 100 moving average right here, because I can see price making contact with it and hopefully staying in this uptrend. What we don't want to see is we don't want price to come back down and just collapse both levels here and then also trade below the 100 MA, because that would be a definite downtrend instead of breaking that downtrend and moving up. So with that being said, guys, I don't want to keep you at all, but hope this video helped. And as always, these videos are for my edification first and foremost, with my investing journey as well as with my family's investing journey. And if these were helpful, or if you want to see anything or have any questions, feel free to comment, like, subscribe, um, and let me know what you guys think. And with that being said, happy investing.